Accounting information. Let's look into the definition of accounting. Accounting is a process of recording, classifying, summarizing, analyzing, and interpreting the financial transactions and communicating the results thereof to the persons interested in such information. In an organization, hundreds, thousands, or more than 1,000 transactions could occur on a daily basis. And if the organization fails to keep track of these transactions, they will face many problems in the future, as they will not be able to recall the cash inflows, outflows, or the credit transactions that occurred in the past. To avoid this problem, we will be following the process of accounting. The first step of accounting is recording. What we do in recording is we keep track of transactions by creating several accounting documents known as ledgers and journals. Step number two, classifying. Once the stage of recording is completed, we will be categorizing the financial information into appropriate groups and headings. Step number three, summarizing. Accounting information of financial transactions are then summarized, meaning the data from the basic records are grouped into appropriate categories. So, any information that is related to the profit and loss statement will be recorded in the profit and loss statement. Example, sales, profit, expenses will be recorded in the profit and loss statement. Whereas any information that is related to the statement of financial position, such as asset liabilities, will be recorded in the statement of financial position. And any information that is related to the cash flow statement, any cash inflows or cash outflows, will be recorded here. Step number four is analysis, analyzing. Not everyone can easily understand the accounting information presented in financial accounts. For this reason, the data from financial statements needs to be simplified. Thus, the process of simplifying the information provided in financial statements for users to understand it better is known as analyzing. Step number five, interpreting. Interpreting is the process of explaining the meaning and significance of the simplified data established by the analysis. Interpretation helps the users to make correct decisions on the basis of information available. For an example, an investor will be able to decide which project to invest simply by interpreting the financial transaction, the financial information. And finally, communicating the results thereof to the persons interested in such information. The results obtained from the summarized, analyzed, and interpreted information are communicated to the interested group, interested parties, such as managers, regulators, government, investors, creditors, or debtors. Finally, accounting information can be classified based on the scope of accounting, and we have three categories: financial accounting, management accounting, and cost accounting.